Stan Fisher, the Fed Vice Chair, talking in Toronto, has some tough words for bankers today and the opposition to Dodd-Frank. He is warning against a bankers' backlash and saying opposition to new financial regulations is making headway. He says it's a mistake to believe the financial crisis is at an end, and he's really talking to defend the current regulation that's out there. And on the issue of Fed policy, he's not saying the government, it's not clear the government has all the tools it needs to prevent all financial crises. And so he's weighing on this debate about whether the Fed should use interest rates. One of the Fed presidents last week said they shouldn't. Fisher saying, you know what, we may have to use interest rates at some point to prevent financial instability. He is warning against complacency that has bred a financial stability, which is kind of a sign to Congress that says don't relax the current regulations that have been put in place in the wake of the crisis. On the issue of the economy, weighing in a bit, saying it's unclear if we're in this issue of secular stagnation, something brought up by Larry Summers, the former Treasury Secretary, about whether we're locked into 2% or mediocre growth here. Although he does point out, Fisher does, that the world economy is still growing very slowly. Very quickly on Eric Rosengren, mentioned by Carl, the Boston Fed president says the weak economy that he sees makes the case for patience in monetary policy, as in he is in no particular hurry to raise rates. He does not expect improvement in the unemployment rate at the current pace of growth, nor does he expect progress towards that 2% inflation rate. And too soon to know, he says, if the economic weakness we've had is temporary. He seems to suggest, guys, that in that negative first quarter growth number, there was more than just bad weather at work. We have a full plate of economic data this week to see if Rosengren is right or wrong.
Yeah, you're going to be very busy. Thanks very much,
Thanks,
Steve
Sarah.
Leisman.
Sure.
And on that Fed note, guys, I mean, Stan Fisher has been at the Fed for a year now, and his comments have been driving a lot of the market action. He's been speaking a lot. Interesting to get his take here on bank regulation post-financial crisis. He's also known as a bank regulator. He's gone after some of the banks really hard when he was the head governor of the Bank of Israel a few years ago. So clearly not focused as much on monetary policy right now, but that's going to be a big question. Financials are actually the leading group in terms of the S&P groups right now. Energy's behind. Energy actually was the worst performing group in May.
Sure.
OPEC meeting in Vienna on Friday. We'll see what happens.
Speaking of financials, Goldman takes Citi to a buy today. Citi, one of the best performing components on the Dow. Their argument, the CCAR results were a little bit better. They argue, this blew my mind, cheaper than 96% of the S&P on earnings and below book.
Is that true?
They seem to think that the bar is extraordinarily low on Citi.
Some news on their Banamex in the U.S. Banamex operations may be curtailed or closed down by the bank itself. On the subject of financial services, worth taking a look at GE. The shares are actually down, but again, the continued pace of asset sales from GE Capital as they essentially, in many ways, wind down that unit with the hope that they will no longer be designated a significantly important financial institution. That continues. The Journal today reporting on another sale of potential assets there. Of course, last week it was reports about their leveraged lending business and bids that are coming in there. But this continues at a rapid pace, despite what was, of course, a years-long time frame for the company to eliminate many, not completely all, but most of the operations of GE Capital, certainly all of those that don't relate to things that GE sells and the financing of them, as they try to get out from under that designation. Of course, back to the points that Mr. Fisher was making about financial institutions, GE Capital was roughly the 7th largest bank in the country.
True. Also, mover Coca-Cola got an upgrade from BMO Capital Markets. Pretty bullish note out there from BMO saying that after years of underperformance in earnings and the stock price, especially relative